All right. How's it going? What's up, Adrian? Hope you're doing good, bud. Just checking sure, make sure I have everything up and running here. Nice. So how's it looking? Is it working? Yeah, everything's up and going. Lovely bubbly. Uh long shorts just crossed, which is nice to see. But yeah, I'm gonna do a little market update, run through a couple different charts, some ideas. Kind of to keep it loose, but I get more time to get like an hour, and then I can do the other stream, which will be fun. So let's go over to that actually. That is interesting to me. So yeah, we can all see that. Great. So looking at some of the data that's come in, this is all January data by the looks of it from the US. Misses on durable good orders, GDP lower than expected. That's bad for the dollar. Zero GDP in the UK. Oh, it's the circular economic death that they're doing. It's just so crazy. I think the next big one is in an hour and a half. We got the JOLTS job opening. So it'll be the first half hour of the market being open, which will be nice. We'll see. This is for January, so it's not super relevant data locally. I think the biggest stuff, let's look at the next week, see if there's anything. That obviously. So Wednesday, March 18th, I think this is one of the this is the quarterly one as well. Understand that they're not going to cut rates. That's kind of their overall projection right now, is the forecast that they're not going to cut rates. That's next Wednesday. So that'll be a big one to keep an eye on. If they randomly start cutting rates, or if they say, oh, well, jobs or inflation or whatever argument they're going to use to do it. I mean, actual inflation, there's that organization called Truflation, TRU inflation. And we've been under 1% inflation for months and months now. But that's gonna be the big one. Wednesday, obviously. Thursday, initial jobless. Interest rate decisions won't change for the EU. Whatever they forecast is like 99% of what you get. New home sales. So it's all Wednesday. Wednesday is the big one for next week. It's the big quarterly review one as well. So it's going to be a big, important one across the board. But it's either Powell's last or second to last. He might have one more as head of the FOMC before he gets the boot. Understand too, it's like my general thoughts in the markets are, once they start cutting rates, everything's going to nuke off a cliff. Like I don't subscribe to the inverse of like, oh, you cut rates, the market goes up. Like I don't subscribe to that. But yeah, that's a big one for Wednesday. I think look at some of the different things we have here for the charts. So this is a cool one on the MDX side. The visual long short ratio crossing. Uh, Anytime when we get these crosses, watch it, because when we get the cross and then we get a break that crosses back, basically it's a very similar setup to what we saw going into the fourth. If you remember that from 2 weeks ago, watch this structure. Basically, if we fail the previous low, which is this guy, so what, 71K, basically, if that gets failed, the whole structure fails, and then you come way back into the mid 60s. So watch that, because when they cross and then recross, this is like they do the little kiss. If there's a swing failure that breaks the higher low, which is this one, which is kind of like what we're doing now. Yeah. If we continue to rip here, though, and we start expanding away, actually creating support here at around 71.6, 71.5, then we're likely to see the highs at 73.7 well, 74K tested. As long as we hold this structure here, if we fail the low of it, it's locally wrecked. But until we fail it, it's actually you're still expecting continuation. It's just if there's the breakdown, that's the loss that breaks stuff, and we can see that it'll play on long shorts and everything as well. Funding rates are bullish or negative funding rates, so shorts paying longs on Binance for both tokenizing shorts, uh, negative funding rates incentivizing longs. It just means that during that funding rate period, you're either getting paid or paying for your position. No major outliers, dude, whatever that is on Bybit. But beyond that, it looks relatively okay. A couple of the majors are still getting hurt. XRP, Doge, AVAX, Cardano, Link. So those five, Uni, Litecoin. So there's quite a few here that are not getting any love at all, and they're back to standard market costs to go high structure. Now, that doesn't necessarily mean anything as far as a breakdown. It just means that if there's a local pullback and the funding rates don't change and they stay in this kind of like, generally neutral slash bearish because it's expensive to take longs, it just means that the shorts are going to get paid to go low, right? But it looks fine. Big negative ones on Bitcoin still. The bigger stuff that's more interesting to me, I think, probably on the Kayotaka side. And this is awesome. If you don't have this, there's a link below. It's totally free. I've been using this a lot more over the last few months just because if the data sets are so much better. Raw order book data, and then you can pipe that into Kscript, which is like their version of TradingView Spine Script. Yeah. But right now, all this is actually looking like organic upside. We've got spot Binance even ticking up, perpetuals mostly leading here, spot aggregate ticking up as well. But it is coming into an interesting area, right? If we look back to the previous structure, what we'd want to see is like a full runaway. For right now, even in this move up, perpetuals are massively, massively expanding. And I think, to be clear, this isn't like the end of the bear market so much as we probably are going to have a bit more potential for rally than people would probably like to admit. But right now, it's all ticking up for the most part. OKX, Coinbase is not. So it's actually flat. Bybit's flat. Stamp is slightly up. Binance is the big one. If you're looking at anything, Binance is the one. So even though it's ticking up, right, and we're technically up on spot perpetuals, and I'm only on the hourly here. The one thing that's concerning is that this thing is still technically down from the flats we were in on the spot side here. So all that means it leads pressure to, like, if we lose 71K, the structure's broken and you're going to test 60, you're going to lose 70K really quickly. And if you lose the lows at 69, 69.1 or 69K, likely you're going to 67.5 very quickly as well. But until something breaks, this is looking like organic continuation of tests into the highs. We're just coming to some huge resistances. That's the big thing. Huge, huge, huge resistances. So looking at some of the other stuff here, and I know I've got so much crap on, so let me turn some stuff off. Profile leave on, I'll turn that off. This is really cool. It's a new one from them. They did a order book profile, so you actually see, on the right side of the chart where the bigger blocks of orders are actually sitting. And this is something I was looking at yesterday. There's about 200 mil layered at 70.7, like as the average. And then as soon as we started doing a wick to the upside, that actually closed above stuff, like closed above, local bullish back test, and full send. What else happened? $200 million in resting orders in the order book got pulled in that little wick move. So that was the big break. That was the break above last night, like 11 o'clock UTC. Close above previous highs, bullish back test the level, full send. So it can happen. That's why we look at those sneaky little closes. They do play out. Absolutely. We're coming to the next block here around 73K. It's quite thin locally. There is some argument if we're going to start breaking stuff to go back towards 70 to do some bigger retesting, but I still like it in the local structure. There's some low time frame failure if you want to look at something like really, really low time frame, and it's basically this guy, 72.3. If you start failing 72.3, likely you come back into the lows to test at like 71. So just a little local failure there would push you back to retest the structure you stepped off from. But some other metrics I like, volume momentum. That's a nice one. Aggregate open interest. We're seeing lots of open interest being built since this candle. So we can kind of see, okay, 16.8. It's now at, what's that, an increase of about 70-ish, 700 million in open interest increase. Just from 71.3. So that's definitely a target. If we do lose the low, I think 71.3 is the bigger failure. If you fail that, you're coming back into the retesting lower. But until that breaks, right, even here, we're getting orders 87 mil, 38 mil, plus all the stuff in between. So 150 mil plus holding here. So watch that. If this does fail at 70, what is that, 72.1? Yeah, 72.1. That's the local failure. And if these guys get pulled, maybe I can zoom in a little bit. These are the orders that if they get pulled, price is going to come back and reset a bit. But until they do, watch it potentially act as pressure. They're fake. They're not going to get entered, right? But it definitely does influence the price as far as liquidity and where it's available. Some other things. Order book pressure, just to look at it. It's a cool one. Lots of local, like low time frame pressure, nothing really major above that. But when we start getting like really heavy topping, you'll get multiple layers of order book pressure until you finally break something like what we saw back here, right? That was the local break that forced the retest, lower high, higher low. And by the time we did this move here, which was that sneaky little close, was everything. Yes, last night. Let's look at the TPO. So this is a good one too. If you don't use TPOs, you should. They're basically cheat codes to a degree if you're not going to be able to put the time in to learn order flow. But this is mostly just a range, like value area high, point of control, and value area low. And basically what you're looking at is if the value area high is rejecting, you short the value area high until it's gained. Where was it gained? This candle, which was then bullshit back tested. So it was multiple things saying the same thing of how significant of a break above the value area high was. Same thing as the low, right? We come into the low, we lose it a bit, it becomes resistance, we gain it back, and it becomes major support down here at 69.5 from yesterday. So until something breaks, this is looking quite strong to come back. If we do start losing the point of control in this structure, which is the mid of it, 71.5, likely you're coming back to the point of control from yesterday, back and probably settled back in here over the weekend, which it's not the end of the world. It just means that it becomes problematic if you lose 70K again to break things. But this is gaining, like even here, closing right literally on the value area high and then full sending and continuing, gaining above the point of control, back testing it, back testing the test. It all looks good, right? It all looks relatively clean in this area. So, like I said, based on the liquidity, based on the order book, based on what we're seeing on a couple of different metrics there, it's all looking like it wants to potentially continue until we see a failure. And the bigger failure starts to happen on this fail right here, 71.3. That's the bigger fail. That kind of ties into the point of control, which is 71.5. Yeah, it hits a lot of metrics, but it's just a 700 million open interest increase. That's what I'm looking at. So where's the step off? It's like, that's the point. If you break that, you're likely to come back towards this low and back towards 70K. So big pressure. The guys, the orders that were sitting underneath here resting, they pulled them. 107 mil, 72.5, just adding up to it. Anyways, let me go over to trading view. There you go. That's much better. Much better. So even here, looking at the hourly stuff and some of the different things we look at, we're getting really overextended. I'd be surprised if we just rip through this whole move on ETH. Same thing on Bitcoin here. You're coming right into like a very key. That's the daily high that we have put in from a couple of days ago. So you're coming into a big pocket of resistance. So if we're going to fail somewhere, it should actually happen somewhere around here. I do really like this as like a local little level. It's a really clean swing move right there. But yeah, you're getting overextended. No evidence of break yet, but if it does start to turn sour and start to break a little bit, that's where I would expect it, and then start to pull back. Super support back here. So like I said, this is the target. If we come back and hold it, great. We're actually looking at this that it could just continue, but it's getting overextended. I think there's a cool spot in here as well. Interested in a potential continuation, and that's mostly based off of Stubers or Stew Tubes 786, 886 zone. So this is all looking like a potential hold, even if we get a major retest here. But for now, like I said at the start, don't fade the move until we actually break something. That's the big push right there. Hold on. Let me see. Yeah, that's the big push right there. Nice. Hold on. Cool. All right, so we got the full test on the highs. The reason that level is a key level is because it is the daily structure. Yeah, that's the big daily test on the highs that we have. That's the highest daily we have. Watch it. If we start rejecting this pretty hard, we could easily end up back towards 70K very quickly. 4 hour as well. You're getting into the volatility part of the candle, so I'm expecting this this candle here to be the high volatility move. So if it does start rejecting really hard, it should come back to retest our zone. But until it does, like I said, you're technically still expecting continuation, regardless of us coming into major resistances. Which, as we know, resistance and support, like it's all mapped by AI charting tools. But the whole point of this is these are areas to take profit first and foremost. So if that was the push, yeah, watch it. High frequencies coming off as well. This little green bar down here. So all this is just kind of showing or leaning into the idea that you're starting to see some divergences. You're over allocated on the retail stablecoin. Demand is very low. So this is why this thing's ticking up. And the volatility is rather bottomed here. So as we expand, should be seeing some changes. But until we fail it, you could try punting the short from up here. Good luck to you. I'd rather see some evidence of failure first. Even low time frame, like even on the 5 minute, you need to fail something, right? And you got support here, so anywho, that's kind of Bitcoin in a nutshell. I think it's all looking rather good for continuation. We had I know in the Discord we had that 5 minute short, the really easy snap one that actually did a really nice retest back yesterday. So there we go. Testing to the dot on the support zone, on the resistance zone. Let's see. And I think also just like throwing this out there, like my kind of general thoughts in this zone is that we're still in a pretty upside move, probably until we start getting into this area. Now, I know there's a lot of data points, there's a lot of things I look at for swings and tests and whatever, but I think we end the upside somewhere in here. And I think if we do get the Feb and some of these levels, it's just so many overlapping resistances. Like I could see us getting up towards like the high 70s. It wouldn't be the end of the world. The problem is that if we then fail back below things, it starts to break stuff very quickly. Because our low that we can't lose is down here at the weeklies. The current weekly open and then the previous one, it's all at 67, 65.7. That's the low you can't lose. If you lose that, this whole structure looks exactly like last cycle, which I'm sure everyone's seen that. Everyone, I mean, for the most part, ignore the crazy sketches, but the area that I reference a lot is this, right? This is the structure that we don't want to replicate. So this is from May to the start of June 2022. Where's the failure that breaks stuff? It was here, the 10th of June. That was the failure to achieve. That was the swing fail. Where was it confirmed? Here. Why? Lower high, lower low. Next candle, we actually cleared the low of the daily structure and it was outgoing only. So if we fail the low, which is like the major higher low, go back to where we are now on the other chart. What does that look like? Well, basically this is the major higher low off of the low, right? The one that we don't want to lose. Because if we lose that, it's game over. Now, that being said, this is still a higher low than the previous ones, right? So what you want to see with the current daily to actually lend the idea of getting trending to the upside is that we close a new daily high. If we do that, everything's a bullish back test until we lose 65.7. And then it looks totally different. Because to be fair, this structure is different. is very different from last cycle. And the reason for that is very simply this. If you all remember the, what was it, 7 months of like crabby sideways down, until it finally did the higher high and the higher low, and then started ripping to the upside, like macro accumulation space. Yeah, that's where we're bouncing on. We're bouncing on this support comparatively to the previous cycle. If we look at the previous cycle here, what was this thing bouncing on as far as support? Nothing. Absolutely nothing. That's the thing. It was bouncing on nothing. And that's why we got this full clear of these massive fair value gaps back into like the first structure, right? The first vertical accumulation pocket. And vertical accumulation pockets look relatively the same. They just, when you're upside trending and just going like this, and then you could break it if you just made it like that, but you have to actually fail it. It's like pretty similar to this structure, right? So we'll know for certain in the next couple days. I think if we're going to be doing more of a gain back to retest like we did back in the middle of June, once we did the big leg down, we actually had a huge push back, about 43%. We're not going to get a 43% up move. Let's just get that out of the way. But we'll know if we fail the structure and then fail the low to confirm the break to go much lower. But I think in general, we're all still of the same mind for the most part that yes, there should be some differences of this cycle, but the expected low is still sometime in October. Because that's how cycles work. That's how Bitcoin trades. 77.7K it is. Yeah. It's kind of funny that it is doing that, though. It is, Adrian, I know. So watch it, like I said. If this is the failure, if this fails to achieve a new high, and then we fail the low here, downtrending daily, break a structure, go lower. And even coming into this zone, you're actually still expecting to hold on first tap test. You're expecting this to hold on first tap test because you're still continuing the upside. It's only when you break stuff. You break the local stuff, you can short it back in this zone where you're still expecting, right? If you fail this, you want to see it come back into the zone. Big support. You expect it to come back up to test the highs and then potentially fail again. We'll see. Until you fail this low, you still got priority up. If you fail that low, you're going to do something like this, and it's going to come right back towards like sub 70. Maybe get a wick into this stuff. But it's still, like I said, quite heavy on the support side to see a continuation. It's really what you want to see really is downside trending that breaks something. That's the low to break on the local. So if you fail this and then fail that, then it's a failure structure. Until it happens, then you ride it all the way back into the lows. So that's the whole point, is that there's no evidence of it breaking yet on any meaningful time frame. Let me just go on some other things. ETH as well, looking quite strong here. So if I'm moving around too quickly, there we go. ETH as well, stepping off its old level here. I think that's relatively done. Let's focus on the local ones. 4 hours is going to be difficult to close above this. You really want to see it achieve this swing by the 4 hour close coming up in, I guess, 3 hours. Just because otherwise it's starting to look like it wants to start to fail and come back to where the daily open is. But even here on ETH, you have to break a lot of levels and come all the way back out of the lows. So even if this is the high, right? I mean, we could arguably say if that's a new low, like we're in the zone to reject. And we'll know when we rejected it if we can actually create support back above here to that achieve the actual high that we failed from the 4th. So if you're playing that game, and the reason this is a potential actual play is because if we look at the 4 hour, we made some lower lows here. And we look at the daily, we also made some lower lows. Now, we didn't fail like the more significant ones, but that's still a lower low than this. It's like, all right. That's the big one here, is that this thing's still closed below. So technically, if we don't achieve the daily today, by end of day, we are looking at a potential swing fail to break back towards the lows. And you could potentially go lower with it. But again, the invalidation is really simple. Do you have upside drive currently? You have upside priority? Are you regaining levels? Yes. Do you expect this area to hold on first tap test? Yes, absolutely. This is the area you expect to hold still. You have to fail a lot of levels to really break the stuff to go lower. Daily's getting a little overbought. You got some bearish divergence playing out on the 4-hour. So, like I said, the bearish divergence stuff, it's interesting in the sense that we could be seeing some lower time frame failures start to happen. We got 3 minutes left on the hour, and this actually looks quite bullish. But all you really got to do is fail the low here, because failing that low, you've already breaking through the high, making higher highs. So if you fail 2120, then you should see a move back down to retest stuff, because you're this hourly close is gonna be critical. We want to achieve that as much as we can, to have a continuation move. Because if we fail that low, then it's a bigger failure to basically say nope, can't do it. But it's starting to get pretty divergent. Like I said, the bearish divergence of the 4-hour, it's on a small thing. Usually when you get a bearish divergence on this thing, it's you're either at the actual high or you get one more. It can be completely invalidated, and all you really have to do is hold the low. If you start breaking the low that matters, you're going to start to see a failure move, that forces you back to retest the highs. And if you fail the daily, the overall structure is broken, and you failed back within the range put in from, this whole range. Because right now you're creating a new high on the range, breaking out into the new spot. If you break back below the range high and you fail back within this range, you're more likely going to come back towards 2040, and then eventually maybe even test the lows at 2K. But it still looks nice. I'm not going to fight the move until it actually breaks something. Let's see what else we got. Solana's gaining the levels, but it's coming into a huge resistance pocket. This is not a small level at all. It is not divergent either, which is nice to see. So still testing into big resistances. Probably that 90 level is the level, I would argue. So lose 90 and you're going to break back into the lows to test lower. But we've got a good hourly close coming up, it looks like. So it looks like it could just continue. It's gaining higher time frame stuff to go higher. And if we look at the 4-hour here, like we achieved the low of the swing, we're coming in to test the high of it. We still, with that now being done, we want to hold this. And we've got a good 4-hour here. Solana looks relatively strong in this area, like comparatively, even to like Bitcoin and ETH. That needs to fail. If you fail this, you fail the breakout of the range. Exactly the same kind of thing as ETH. Whereas if we fail back into this zone, right? That means we're failing ranges to go lower. And if we fail this structure, we're coming back to where? The daily, at the very least. And then you have bigger problems, which is actually holding any type of structure. Bearish divergence as well. So this could be actually it. But we won't know until it actually fails something. I'd say locally, you might even just be looking at this little guy. Yeah, it's that. Fail back below 90. That's huge support, even on the 5-minute. Geez, if we fail that, it's much more likely to come back into the zone here. But that still looks aggressive and strong to have higher tests. It's playing the levels to a T, if you see. Absolutely perfectly. It's divergent as hell, but it's still doing the stuff, which is good. What do you think, Adrian? You got any tickers you want to look at? I'd love to see them. Or anyone in the chat, by all means, fire away. I'm gonna look at a couple different things here. But yeah, that's low time frame failure. Still massive support. You're expecting that to hold and actually have some pushes deeper into this resistance. Should see a little rally on the open, which is nice. I know there was a big sell off yesterday, right into that high, but we're potentially making a higher low. So this is going to be a big one if we can achieve 24,700, 24,670. That's going to be the big one in my mind. And the same thing in the S&P. Potential for higher low, holding back above stuff. Obviously, we had a big rout on the end of day. Not really unexpected for Thursday. So we'll see. It actually looks quite good. The 4-hour close here was actually decent to hold and continue and see some gaps up on the open coming up in, what, half an hour? On oil, and this is a cool one because I know we've been watching this quite a bit now. Oil's come up and perfectly tested our zones as well, failing off the weekly to come back lower. That being said, the macro for oil is not breakdown. I just want to be really clear. There's no evidence that like the party's over. It's the same thing for gold and silver. Like generally commodities, especially like LNG, like natural gas. There's even a helium play, right? Because there's so much helium that comes out of that region as well in the Middle East. But yeah, there's no evidence that the macro is done. I think we'd have to lose 80 on a pretty meaningful time frame to break the structure here. To then hopefully we get peace, and that'll be a beautiful thing when that happens. Hopefully, of render is on fire. Hype about the breakout. Yeah, let me look at those. Render's fully parabolic, man. That is giga. You're coming into a big first resistance, though. Let me see if it's on the hourly as well. You might get a continued push to 2 is gonna be a hard achievement. If you're looking for like a key, it's that. Very unlikely you get first tap breakthrough of that structure. You're coming into the first resistance pocket, but you've got like 4 overlapping pockets above you. Render generally still looks good in this area. It's very divergent though, so if it does start to fail, you are going to see some divergence pop in. Yeah, this thing's just charging since early Thursday. The gain above, where was the gain that mattered? The February regain at 1.55. That was the regain that started the whole move. The pop above, the close, the back test, the back test, the back test, everything's continue. This thing would have to fail. Let's see if we go higher time frame so you can just see the levels here. It's a very high time frame level. Hold on. Oh, that's the old drop down swing. I think that's effectively done at this point. Yeah, you'd want to see for this thing to start breaking down. You'd want to see this failed. 1.86 would be the likely move if it does start to fail to go back to retrace to 1.7. I think that's a free one, but yeah, there's nothing evidentiary of a failure here. It looks like it's stepping off just like it did back in January when it did this move. And to be fair, this whole structure that we just played out did a higher low. Even though we did a nasty wick, we still closed above everything that we needed to and built support and held the lows that really mattered back here like a week ago. So yeah, I don't see any evidence of failure here. And that's a high time frame to fail. You're starting to see high frequency come off on the lower time frames, and you're actually bearishly divergent here. So if you do on this current hour start to fail back below this, it's not the biggest end, but you're going to come back to the low that matters. You want to see the holds here. If you start losing that, just cut everything and go back towards the December and daily, and you probably even fail that. There's just so many fair value gaps below. It could retrace the whole move, like legitimately. But it's still going higher. I would say like you're getting very close to some major profit targets on the longs here, though, in case it does fail. But there's just too many fair value gaps to exploit if we actually fail it. Yeah, it might actually be that 1.775. I like that. I like that. That's better. Yeah, fail 1.775. You get a bigger push down back towards 1.7. If you fail back below 1.86, break back down to the lows. So until that happens, every level is a potential continuation move. I like it though. It's a nice call. 1.96 is my yep. I can see that. That makes sense. It's going to depend also on Bitcoin. If Bitcoin gets sharply pushed back, then we could possibly see something. But it looks like we're seeing an up Friday, which is lovely. We'll see what happens on the open in 25 minutes, but because of that open is nasty, and knowing that TradFi is going to gap up, and if TradFi starts moving to fill the gap, could be seeing the start of a little Friday pullback. But as always, I mean, the 24-hour, 24/7 crypto market. It's once Friday's closed, that's great. Well, the weekends have been filled with shenanigans ever since we entered the bear market. Absolute shenanigans. Sorry, YouTube chat is weird. Yeah, I mean it's a bit interesting, but it's nothing crazy. I'm trying to get back in the swing of things. I think I might use like a different streaming service than just OBS. I need to get some music in here, you know, do some other things as well, make it look a little prettier, make it more attractive to people who need flashing lights and things. What was the other one you talked about there? Hype. Yeah, hype, and ass are the two that you don't bet against. I not hyper. Hype. That's gotta suck. uh, let's see. Let's go high to low time frame here. So list price is doing good. Big step off. Huge on the weekly. You're testing the highs that you didn't see since the start of the February. You're testing the lows here. I mean, you have some serious levels of potentially regain. Like that's going to be a major regain if we can actually regain 37.3. You know, even where we are in the bear market for Bitcoin, I think the low is in on Aster and on Hype. I've got that weird feeling that the low is actually in for them. It feels that way. It's already done the big back test, and this is a little cheat code for people who didn't catch any of the moves since like the start of the year. Anything that did its October 10th dump, and if it tested the dump level and it stepped off from it, like that's your bottoming signal. And if you haven't touched that yet, be cautious of upside because that's still the general bear market target for almost every single altcoin is whatever they whip to on October 10th. It leads the way in a sense. Um, so yeah, hype even on the daily here, it looks great. It's getting a bit overbought, but there's no evidence of failure yet. Um, 4 hour, it's starting to slow down a bit. Like there's got big fair value gaps below a lot of the structure, but you're still expecting this stuff to hold. The local failure is the daily. With the lows tested fully, if you fail the daily open, you're just going to pull back to like 36.2. So if you fail this little guy, you're just going to come back and do that. And coming here, you're still expecting a test back into the highs. Why? Higher highs and higher lows. We're trending to the upside. What does that mean? That's your pocket. That previous daily open, 36.2. You're expecting that to be the bounce step off to continue. Maybe not even that, but at least to come back up and retest the daily. If you fail the daily, you're coming back to the previous one with a very high likelihood of retesting the daily. How do you know that that's not going to happen? You got to lose this low at 35.8. If you lose that, any bounce play is done. And if you do bounce off the daily and then lose it again, what does that do? Swing failure, trend down, and targets back towards this stuff. But until that happens, you're actually expecting this thing to continue. So it's a lot of, so it's nice to have a little game plan in case where we go, where we think we're going to go, you know? Have a look at hype. I am looking at hype. I'm just messing with it. How about lower time frame? Lower's a little wishy-washy. I don't like that close there. That was a bit of a nasty one. Yeah, you could probably get away with this failure being the move that breaks you back to the previous daily. You're still expecting that to hold, but actually no, that thing's hold fully. I call that fully tested. You fail the daily, it's going to go back. So the daily open is still the level 37.2. But for right now, we've done a little bit of a lower low here. If you break that lower low before making a new high, the structure is now failed and you're coming back to test this at the very least, but you're expecting the bounce retest until that's achieved again, and then you test higher. So basically, if you get the long here, take some profit. There's a potential rejection play because you're in broken structure to go lower. If it regains the daily, you're going to come in and test the highs. So it's nice, pretty clean price action, in all honesty. Lots of divergences though. It is slowing down. It's probably overdue for some correction, but we have to see an actual failure first. That's my argument. I think in general here, some of the stuff I always look at the VIX. This is a potentially really good sign that we're rejecting the buy everything level, super discount, gain for market crash. Yep, that's all playing out. We're rejecting this. We want to get it back towards like below structure as much as we can today on the VIX. If that was the real big windup, and that was, obviously the Iran war got started, we want to see movements back below to break some of these structures. The real levels are down here. Lose 20.4. You're in this golden zone, and you're going to see some big relief rallies. The problem, and this is like what I'm seeing just on the bond market with all of these things happening, and I think from my opinion, one of the biggest problems that's going to come out of this Middle Eastern war now, this new one, is you're going to see quite a few of the Arab states kind of turn away from the U.S. that have been using like air bases there, which are mostly destroyed right now. And if they go, the petrodollar goes. If the petrodollar goes, the bond market goes in a large way. It's a house of cards in reality. Because the thing that I'm worried about the most here is this guy, and the move hit all my alerts earlier because we're now breaking way back above stuff. Way back above stuff. And the reason I look at the move, and this is usually, it's a pretty niche thing for the most part. I don't see a lot of people talking about it. That's pretty crazy, that much of a jump. But what is that indicative of? If we look at previous levels, right off of the low, by the time we did like a 3-stage up, that was like the end. That was the SPX high. And then that continued until we actually hit a low. We confirmed it by a 2-week, 3-week breakdown. And then that was the actual low in the TradFi market. This is stepping up like it's doing the start of a major change, which it is. It's a major change of structure on the move, which means that we're probably coming into something at like the end of something. Now, if we're going to be talking about where the failures that are actually going to break the structure are, I think it's important to look at the time frames of like the S&P as an example. So if we plot this and say this is potentially the high that we did here, Monday the 26th of January. Let's go back to the move. At the actual bottom. That's look like more like the actual thing now. The worst case scenario that would confirm this is if the move stays up into the zone like plus 100 and then the entire TradFi market rallies. If there's a major TradFi market rally back towards the highs and the move is still above, call it 90, likely that's the end. That's the end, because the funniest thing would be like one last little hurrah test of the all-time high, maybe even pop a little new one and then wrecked. But this is looking like a fundamental shift in the market right now. That's what it's looking like. But for now, Bitcoin's still stepping off pretty aggressively here, looking like it wants to continue. I need to see some evidence of failure, something breaking, something, because now what we've done with just this little test higher, that's the last 4 hour left to test. Why? That's arguably done. I mean, that's ballpark $100 or $20 or something. So there's nothing left to test. The daily high as well, that 72,640, which is this line here, that's the big test as well. So if we can achieve this high, like close above this on the 4 hour and then on the daily, I mean, the bottom is locally in and you're looking at continuation of the high 70s. And that's the expected move still. We'll only know that's not the case when we confirm that we fail to achieve a high higher than the previous one back from last Wednesday. And then we fail, like say the lows here at 69. That's enough of a failure to kind of confirm that that's a lower high. But it looks, let me see. I don't know why that switched back to investing.com. Maybe it's just on my end. But it looks still pretty good. And if I'm going to be honest, I'm not seeing anything that's locally rejecting the hourly. I think that's the cleanest one there, is that you've had a huge bullish candle on the hourly. You're coming into major resistance. If you got longs on Bitcoin, this is a great take profit zone. If you want to look at something as a failure to break back down, because high frequency is coming off, confluence is quite high, retail stablecoin demand is quite low. Like this is the inverse of it, but and then volatility is also starting to bottom. So if we start to see a move down, volatility ticks up, this ticks up, that ticks down, right? We're going to see something like this, and then that failure is what breaks stuff to come back towards this kind of general zone. But we have to fail something. Even failing back below 72.6, you might get away with a punt back to retest the local stuff. But that's the bigger failure, that if you do not hold it, if you fail it, pretty high likelihood you're coming back into like the mid 71 zone. Lots of resistance here. Huge block, it looks like. Yeah. For context, there's about 180, $170 million worth of shorts in the order book right here. Now, that doesn't mean anything other than the market's still going up and towards that liquidity. Yeah, there we go. So it's still going up into the zone. It's only on the failure. So until that happens, we're still seeing increases in open interest. We're still seeing increases in basically all attractive metrics. But it's really just this little local one needs to fail to start something. But don't fade the move. The trend is strong still. But I think because I got the other stream coming up in about 10 minutes and the MDX side, I'll probably just do a little run through and look at or talk about what I'm looking at. So from the Bitcoin side, definitely just seeing continuation here. No evidence really of total failure. The thing to achieve on the daily here is 72,640. Closing above that in the daily solidifies a higher daily close, which means we're looking at all of the structure below us as basing structure to have a continuation. I think, and was my general thought, that we are likely to get continuations until towards the end of the month. I think things cycle wise by the end of March, end of Q1, going into Q2, we've got the options unlocked, the quarterly options, which are probably quite high, I'm assuming. And usually, if there's some Q1, Q2 shenanigans that happen on the option side, like we saw last cycle, you probably get a bigger swing fail that starts a move, because we're eventually going to go lower. That's the expectation. Like this thing is not out of the bear market by any means. It needs to achieve February and then achieve 86 and the yearly open. If it can't do that, then there's no opportunity for it to have a continuation move, because even coming back all the way up into those zones, you're still looking at this as a macro failure. So even popping above, you'd see like 90K potentially, and you'd still see the failure. Like it's the bear market, right? The cycle of it's still continuation lower. This thing to cleanly break above, you'd have to regain this old May level at 94K. Like you'd have to achieve that to convince me that the bear market cycle 3 up 1 down is broken. But I think in general too, I'm still of the mind that the whole market as a general kind of rule is going to roll over sometime in Q2. Likely when the Fed starts cutting rates. I think that's regardless of what happens between now and then, I think the rate cuts will be brutal. The blowback of what's happening in the Middle East is going to be absolutely destructive to the US dollar and the US economy, and they're probably likely to get forced out of the Middle East after this. I think even on ETH too, you just got to clear that little high. 21.24. Closing above that is 21.30, call it. like I said, I think you get good continuations all the way into the end of the month, into Q1. And then once you get the Q1, Q2 flip, then that's probably maybe some sideways. Yeah, I think the bigger thing here is just once the rates start getting cut, I think that's it. I know it's counterintuitive, but I agree with Professor Richard Warner about that. I don't see rates, like interest rates don't drive it like people think they do. But yeah, even on all the metrics, everything we're looking at here, we might be getting into some toppy stuff. But I'm not going to step in front of any of this. This looks like it might just continue until we break something. Everything's up until proven otherwise. Yeah, see you on the other side too, buddy. So for me at least, watch the levels. Everything's having a really nice day. The thing I'm looking at the most here is the USDT USDC chart. This is an easy ticker. You can just copy and paste USDT plus USDC.D. So that plus this, and you'll get this ticker. And this is the bigger one that I look at for like macro performance, and this is starting to break stuff. So if we have a breakdown here of this USDT USDC level, we're going to get a rally that melts some faces and it freaks people out thinking that the party's over, or that the party's starting again, that we're going to get the bullishness. Everyone's going to have a big sigh of relief psychologically, and then we're going to swing fail something really poorly. So this is the big one. We're breaking back below the lows that I'm interested in. If we break this, we might actually be closer to, if you think last cycle, what was it? Closer to this type of structure than we are here. So if we do fail and start breaking back below, we're going to get maybe another month or two of rally on the crypto side. Or not, maybe not a month or two of rally, but maybe like 2 weeks or 3 weeks of rally before we kind of settle. It's like I said, it's not the bottom of the bear market by any means. Even by doing that, we could have a bit of a smaller pullback and then continue. The expectation is still, given the amount of stablecoins that have increased so much, that we're probably going to end up somewhere around like 13% at the very least at the end of the bear market. At the very least. But yeah, I'm going to bounce over to Discord stream. We got some other cool stuff cooking in there. But watch the open. We could start seeing some smashbacks on the open. There's gonna be some gap up on the index side, so that'll be cool to watch. And volatility's coming down. We'll see what happens in the open. The big one I'm worried about is the move, which will go through in depth on the other side. So I'm gonna call it there. Thanks everybody. It was a fun little session. I'll be back. I'll start doing the Fridays, and then I'll start building up and doing some extra ones. I'm just kind of getting back in the swing of streaming and stuff because it's fun. It's exciting. I like to get my thoughts out, because when I say them, I can start to like articulate the overall process of it. But that's that. I'm gonna bounce. So thanks everybody. See you next week. Later.